Good evening. I hope you all had a nice Friday and end of the work week. Today was a bloodbath in the market as fears of coronavirus rose and what that could mean to the economy. The S&P 500 lost a large 2.42%, while the Dow lost an even worse 2.84%. The Nasdaq performed poorly as well, as it lost 2.59%. American consumers greatly increased their spending in May, as spending increased by 8.2%. This partly erases some of the huge losses over the previous few months, but consumer spending remains very low. The Commerce Department's report showed that Americans increased their spending in May despite a 4.2% decline in personal income, which had soared by 10.8% the previous month. Income had jumped in April on the strength of billions of dollars in support through government payments in the form of unemployment aid, as well as the one-time $1,200 stimulus checks. In May, those stimulus checks were no longer counted as income for most people. Besides, whatever unemployment aid states are providing to the 30 million jobless Americans, the federal government is providing $600 a week in additional benefits. The federal money has pumped nearly $20 billion a week into the economy and has enabled many of the unemployed to stay afloat. But the $600 a week in aid will expire after July, and the Trump administration officials have said they oppose an extension. Without the stimulus checks or an extension of unemployment aid, it's unclear whether consumers will continue spending freely. In testimony to Congress last week, Federal Reserve Jerome Powell said he thought Congress should consider providing some form of extended unemployment benefits beyond their typical 6-month period, on the assumption that joblessness will likely still be quite high by the year's end. Last month's rise in consumer spending also coincides with a sudden surge in coronavirus cases that's forcing states and businesses to consider scaling back or even reversing the reopenings. If an escalation of the pandemic does force another round of widespread business shutdowns, fewer people would shop, travel, eat out, or attend large events. That would reverse any rebound in spending and would further weaken the economy. The coronavirus continues to place fear into investors. In Florida, cases rose by nearly 9,000 yesterday, while their previous record was only around 5,500. The coronavirus has now infected 122,960 people in Florida and has killed at least 3,327 people, according to the state's health department. The Florida Department of Health reported Friday that 13.05% of all tests came back positive, up from 8.92% reported yesterday. The governor of Texas announced that the state would be rolling back some of the reopening measures. Governor Abbott said, quote, "As I said from the start, if the positivity rate rose above 10%, the state of Texas would take further action to mitigate the spread of COVID-19. At this time, it is clear that the rise in cases is largely driven by certain types of activities, including Texans congregating in bars." End quote. As of Thursday, the average daily number of hospitalizations in Texas has increased nearly 55% compared with a week ago. In the absence of a federal order, 12 states, including New York, Delaware, Connecticut, Massachusetts, and New Mexico, have mandated that face coverings be worn in public. Washington, North Carolina, and Nevada were the latest states to introduce requirements that kicked in on Friday. Other states have stopped just short of requiring masks in all public places, but have made face coverings mandatory in a range of settings that include retailers, grocery stores, and on public transportation. Virginia and Michigan have even required masks to be worn in indoor public spaces statewide. In a surprising move, Microsoft announced that they would be permanently closing all of their retail stores. It will instead focus on its online store at Microsoft.com, where customers can go for support, sales, training, and more. Microsoft Corporate Vice President David Porter said, quote, "Our sales have grown online as our product portfolio has evolved to largely digital offerings, and our talented team has proven success serving customers beyond any physical location." End quote. The decision seems to be made after Microsoft decided to temporarily close stores in March due to the spread of the coronavirus. Microsoft said the closing of its physical locations will result in a pre-tax charge of approximately $450 million, or 5 cents per share, which it will record in the current quarter that ends on June 30th. The company said, quote, "The charge includes primary asset write-offs and impairments." No sector was spared in the large sell-off today, but no one performed worse than financials and oil and gas, both of which were the top performers yesterday. Today brought them back to earth, as they each lost close to 4%. Utilities and healthcare had the best days, but were still down more than 1% each. Value as a whole performed the worst today, as small cap value had the worst day of them all, being down 3.37%. Regardless, no one was spared as the sell-off was felt by everyone. The largest gain in the S&P 500 by far came from the Gap, which gained a remarkable 18.8%. This large gain came after it was announced that Gap has struck a deal with the popular rapper and fashion star Kanye West. According to the report, West will be designing adult and kids' clothing. The second largest gain came from NetApp Incorporated, which gained 5.16%. NetApp is a cloud data services and data management company. This move seems to have no information backing it. No one performed worse than Huntington Bank shares, which lost a terrible 11.02% during trading today. Huntington Bank shares is a bank holding company and is one of the largest banks in the United States. This move comes after it was announced that many banks' dividends are at risk after the stress test imposed by the Fed. As for the actual stress test, results showed that, quote, "all large banks remain strongly capitalized," end quote, according to the Fed. But Fed Governor Lael Brainerd objects to allowing banks to continue paying dividends thanks to the change in financial conditions caused by the COVID-19 pandemic. She said, quote, "temporarily halting shareholder payouts at large banks due to the COVID-19 shock would create a level playing field and allow all banks to reserve capital without suffering a competitive disadvantage relative to their peers," end quote. The other poor performer was KeyCorp, which is another regional bank. KeyCorp lost a large 8.91% due to the exact reason as the previously mentioned Huntington Bank shares. In fact, 9 of the 12 largest losers in the S&P 500 today were all banks, including Goldman Sachs, Comerica, Capital One, and Wells Fargo, just to name a few. No notable company reported earnings today. Next week's earnings will be pretty light. However, with the quarter coming to an end, earnings will start to pick up. Regardless, let's look at what is going on in the week ahead. To begin the week, Monday provides us with a glimpse of home sales, while Tuesday provides us with a lot of information. On Tuesday, we will get the Chicago Purchasing Managers Index, a glimpse at the consumer confidence, and we will hear from Powell and Mnuchin about the Fed's pandemic response. Wednesday and Thursday are jam-packed too. On Wednesday, we see vehicle sales numbers, manufacturing numbers, and the Chicago Fed president speaking. On Thursday, we get the highly watched employment report, weekly jobless claims, and how international trade is looking. To end the week, the market will be closed on Friday, in observance of the Independence Day holiday. That is all that I have for the show. Hope you all have a fantastic Friday and an even better weekend. Thanks for watching, and as always, I will see you again on Monday.